Well, it's really nice to meet you. Thank you. Sorry for this snafu, but thank you for having me.
No, on the contrary, thank you for accepting. It was very promptly my request. I know we didn't met before, but it was like I've been working with Moxie with my clients here in Tulum. I'm based out in Tulum, and I was like,
Okay.
it's really nice the kind of products you offer.
Yeah.
But I think I saw you on the short-term rental expo that is coming up, right? Very soon,
Yeah, I'm speaking
November.
in at that in November. Yeah, and I think I spoke 2 years ago at in like 2021 as well. So they asked me to come back, but yeah, I'm excited to be there. It should be fun.
Yeah, so I said, why not reaching out
Yeah,
and having a small conversation about Moxie, interest rates, like the challenges, and like for me, this should be very non-scripted conversation,
sure. Yeah.
and we can start in a few minutes. Like this is gonna be like just cut out of all of the podcast. And yeah, of course. Well, let me tell you a bit about me, about myself, the company I work at, which is my company. So I'm Roberto. I used to work for fintech companies,
Hmm.
financial technology companies,
We're a
and
fintech company. Yeah.
oh yeah,
Yeah. Well,
okay,
we
okay.
we like to we in certain ways, yeah.
No, I mean, I don't doubt it. You have to use a lot of technology to calculate risk and return and take decisions faster amid like an uncertain landscape, which could be. But you
Yeah.
can tell me more about that, of course, during
Yeah.
the podcast.
Sure.
So yeah, we are a brokerage company that is pivoting actually into a fintech company very soon for real estate transactions in the way that uh, we connect the parts, and we're still the middleman. We're still the middleman. We find the deals, and we source them to different investors, and we get them the right capital, right, to the opportunity. So it could be an individual investor looking to get into a deal which needs financial backup from institutions, or private equity, or just from their own funds,
Hmm.
that kind of things. But
So
we're
you're
a brokerage company.
sourcing specifically like residential real estate
Yes.
transactions? Okay. Okay.
Yeah, residential. We're focused on beachfront properties, villas, and special properties that can yield good returns for investors.
Nice. Good for you. That I think it's great. I think Tulum and the eastern part of Mexico in particular represents a lot of value for investors. And I think, from a US real estate investor perspective, um, I think we will in short order start to see a lot of, people coming to Mexico attempting to do what they're already doing in the United States, but now, with prices where they are and interest rates where they are, there's less and less value in the US. And so I think that plus like Mexico is the number one tourist destination in the world for US travelers. So I think it's just a recipe for a perfect opportunity down the line. So I think it sounds like you're in the right place at the right time doing the right thing. So
Absolutely. So why don't we just get started?
sure.
Let me just do a bit of introduction. Um, okay, so hello and welcome to a new episode of Investing in Mexico. Today, we are with Alex Kooper from Moxie Global Mortgage, having us today with this conversation about interest rates amid an uncertain financial landscape. And we're very happy to have you, Alex. Thank you for accepting our invite. Can you please tell us more about you?
Yeah, thank you, Roberto, so much. It's really a pleasure to be here with you today and meet you. and hear about the exciting things that you're doing in the Riviera Maya. I think that's really, really, really cool. So happy to be here. Thanks for having me. My name's Alex Kooper. I'm the CEO of Moxie. Moxie is a fintech company focused on democratizing access to global homeownership for the world and for the world's people. And our initial wedge into this multi-trillion-dollar annual opportunity is providing liquidity and capital to help people, U.S. citizens specifically today, purchase, refinance, or cash out refinance property in Mexico. And so not only do we provide 30-year fixed rate mortgages originated in U.S. dollars and serviced in the United States, secured by the property in Mexico, but we also, our expert team, kind of on both sides of the border, helps clients to navigate the intricacies of a nuanced transaction in a foreign country, but also to be able to, literally navigate a foreign transaction, but not in a foreign language, if you will. So our legal, compliance, closing, underwriting, and risk teams kind of all work together with our customers to help them have a really good outcome, in addition to providing the capital, obviously, and giving them a mortgage, which in and of itself is a pretty unique value proposition. So we've originated nearly $100 million in mortgages in the last couple of years, and we're growing and expanding every day, which is really exciting.
Wow, that's crazy. Like $100 million in origination. That's just a milestone. But I don't doubt you will reach more. I mean,
we've sized the market of U.S. citizen purchasing or refinancing property in Mexico at about $56 billion a year. So we're just scratching the surface at this point. But we're really excited about the growth. And I think what you and your team are doing in Riviera Maya, you're perfectly positioned as well. So it's exciting that we had an opportunity to meet.
Yeah, I agree. And you said you were just scratching the surface. Like how long you started go like how fast has Moxie grew the past few years?
Yeah, so we initially, I would say a majority of our Moxie's predecessor company has been around since 2017, but a bulk of our growth has been in the last 3 years. We rebranded to Moxie. We completed our initial pilot where we sold mortgages into the U.S. institutional capital markets and really got U.S. institutional capital investors comfortable with Mexico collateral. And that enabled us to bring in loan capital at very reasonable interest rates for customers. So we secured a flow agreement for $300 million in like 2022, renewed it again last year. So I'd say a bulk of our growth has really been in the last couple of years. And as we've done our pilot programs and as we've gone into full-fledged production, the Moxie team has built a digital origination process. But really, in addition to that, our team is fantastic, right? And works with clients every day to navigate not only the mortgage transaction, but also this what can seem very complex, transaction of ensuring that you're closing securely and that what you're paying for, either upfront or for the next 30 years, is actually that you're actually buying it, that you actually own it, and no one else can come stake a claim to it down the line, right? So we can, of course, get into any of that, but the diligence that we do on behalf of our clients from a property perspective and in compliance with local and federal laws in Mexico and in the United States is I think a really big part of the value that we add to the equation.
Yeah, and the success.
Yes.
And you have mentioned a lot of interesting things. You mentioned you had to get the buy-in from institutional investors to get actually better rates. What was the pitch to them? What was the thing about Mexico?
I think, So I'll set aside all the amazing things about Mexico just for a moment, and we can talk about that in a second. But I think from a capital perspective, what Moxie was really focused on demonstrating is the quality with which we originate and work with our clients to investigate and diligence the collateral. I think that's the key component, right? So looking at everything from title history to engagement with the seller, right? If you're in a resale transaction, in the United States, like a buyer or a borrower would have very little communication with the seller directly. In Mexico, it's a totally different ballgame, right? And understanding the way that properties are held are, is the seller a foreigner, which means the properties are likely held in a fideicomiso. That fideicomiso needs to be extinguished or needs to be substituted for a different trustee, right? And that's a really complex process to navigate, especially when you don't speak the language or have the connections within the financial markets in Mexico. So back to the original question, right? It was really about demonstrating the quality with which Moxie diligences if you will, the property, the seller, and the transaction overall, and then securely documents and records all of that. So Moxie works with our clients, of course, during the origination process, right? Loan application, underwriting, throughout the property diligence process of title investigation, title search, title insurance, appraisal, all of those kinds of things, construction manifestation. But then we continue to follow the transaction for 6 to 12 months afterwards, as far as documentation is concerned, making sure that things get recorded properly and are sent to the document custodian. And then we're really a partner for our client for the life of that transaction. So as the client continues to pay the mortgage loan, we continue to offer value add for the life of the transaction. So that could be up to 30 years, right? In many cases. So I think it's really about demonstrating that kind of quality. We've built a lot of technology around doing that and making sure that we can do it efficiently and in a customer-friendly way. And it's that quality that we demonstrated to the U.S. institutional capital markets that got them really comfortable with it and enabled us to, bring a really good product to U.S. citizen buyers or existing owners who are looking to refinance.
I guess one of the also key metrics, or you would say, probably say different, was also the default rate.
Yeah. So as of today, we have had no defaults, right? Which is great. And if you're in the credit business, you want to make really prudent lending decisions. And so, yeah, we have not had any defaults or late payments or anything like that on our portfolio. And I think that speaks to the quality with which we diligence not only the property in the transaction, but also the borrower and their ability to repay and so on and so forth. It also speaks to kind of the quality of our credit policy as well. So, for example, I think this may be a good time to share that with you. So Moxie will lend between $250,000 US and $2.5 million US. We offer all of our interest rates are fixed. And we offer term lengths 15, 20, 25, and 30 years. The loans are all originated in US dollars. They're all serviced by a subservicer in the United States. So interest gets reported to the IRS via a 1098 INT, the same form that you would receive at the end of the year from your mortgage servicer on your house in the US, right? So very similar. A lot of clients report they can deduct mortgage interest on their US taxes when they borrow from Moxie. So I think that's like a critical kind of component. It looks and feels a lot like a US mortgage, despite the fact that the collateral is actually in Mexico and has been properly diligenced, of course. The other, important thing, just remind or to share with you and your listeners, we require 35% down. So the maximum LTV we'll lend on is up to 65% of the purchase price or appraised value. And so combination of like pretty high credit score, pretty low debt to income ratio, and significant skin in the game from the borrower, putting, at least 35% down leads to overall a high credit quality portfolio.
Yeah, absolutely. I agree. The skin in the game is important for investors. But I have one question. When you start originating and doing all these due diligence, wasn't that complicated for at the end for your clients, your customers? I know you are a technology platform, so can you tell us about like how is the process of getting a
So
mortgage with Moxie?
we have an internal sort of saying amongst our team that we want to be faster than cash. Historically speaking, the foreigner Mexico real estate market has been an entirely cash transaction basis. What is actually happening is not necessarily cash from a buyer's checking account, right? It's actually coming from some other asset or some other borrowing facility in the US, and then just sending the cash over the border. So our goal has always been, let's make the process easy, secure, and fast, right? And let's do it faster than you could accomplish a closing with cash. And so we built our workflow and our technology solutions kind of around being able to do that. So our fastest closing we've ever done is like in 23 days. That was in a non-restricted zone. We work with clients sometimes months before they actually get into a contract on a particular property to get them completely underwritten, whenever they come to us is when we start working on it. Sometimes we don't meet the client until 15 days into their contract and we have to hurry up, right? So we work with that as well. But that's kind of like high level where our focus is. The average transaction is about 60 days, but it varies so wildly based on the location, based on how the seller holds title to the property, right? Is the seller a foreigner? Is the seller a Mexican entity or Mexican person? So do we have a trust to cancel or substitute or not, right? There's all sorts of different kind of complexities within that, but we are the experts in that and we make it relatively seamless for the client. So we'll of course share all of those details, but clients don't have to like worry about it and sweat those kinds of details because that's what we do for them.
That's amazing. And talking about sweating, interest rates. What do you think?
Interesting topic. This has been a really interesting couple of years in the real estate industry globally. I'll speak to the US specifically. The Fed's actions around tampering down inflation in the United States have really impacted interest rates a lot. And we're starting to see potentially that we're at a peak level, which is, I'm cautiously optimistic about. But so interest rates at Moxie generally are going to follow what is happening in the United States, right? So you take the 30-year fixed owner occupied interest rate in the United States, you're going to add a little bit to it from a risk premium perspective, right? Because this is probably not owner occupied, and two, is in a foreign country, right? And there's some additional complexities. And that's more or less what you're going to see. So Moxie rates change on an hour by hour basis with the markets, just like any US mortgage lender. But generally our rates are going to be a lot lower than you might see from a Mexican bank, for example. And, I'm happy to answer more detailed questions if you have them, but it is a really interesting time in the interest rate environment. I think the other kind of cool thing to think about, especially for real estate professionals, is the opportunity cost for a cash buyer today is high, right? So if you are holding on to, let's say, $1 million in cash, what you can earn in a very safe treasury yielding product in the United States right now is pretty high. So to take that cash out of those treasuries and wire it across the border and buy $1 million property in Mexico is a lot bigger deal than it was 2 years ago when, you couldn't earn anything on that cash. So I think, leverage is a really important element of any real estate market, especially in the luxury side of things, and especially when you sell to property investors who are looking for return from the standpoint of, short-term rental or long-term rental, or buy and hold appreciation, either one. And so that's, if anything, made Moxie's value proposition even more important in the last, couple of years. So we are actually, contrary to what's happening in the United States with mortgage originations, we're busier than we've ever been right now, which is great. And we're growing even more than we ever have, which is really, really awesome. So I'm excited about that.
No, I mean, I'm excited too. And you mentioned just what I wanted to hear in some way. Like, of course, there's always opportunity in, most importantly, when like every I think it's almost a common saying, like in downside economies, like that's where you can make the most money from real estate investments, and getting a leverage on a financial product and getting your cash to work, probably in other kind of investment vehicles, you can definitely have a good opportunity looking forward in terms of appreciation once the market is flooded with buyers, right?
Yeah, absolutely. I think, I mean, if you look at real estate holdings on the whole, right, like it's up and down, but if you look at the graph this way, it's up over time, right? And I think, most people know that. I think there is definitely a softening as far as like the level of fear about doing that in a foreign country, and that's exciting. And we have a important role in that for people, for Americans especially, who are looking to, make Mexico part of either their real estate holding portfolio or a second home or a primary residence, right? We talk to people every day who now have the ability to work remotely some part of the day, week, month, year, quarter, or, who had this dream to buy a home in Mexico and move there when they retired, and now they've moved that timeline up 20 years because now they can, right? And so we have an important role in making that possible for real estate investors, for regular people who have had this dream and didn't realize it was possible.
Absolutely. And we were just discussing right before we started the episode about what Mexico represents as an opportunity versus the US. So
yeah,
what do you mean by that? Like, what do you see? What is the landscape currently in the US, and how can you think Mexico is a better opportunity? Probably.
well,
Right.
yeah, and I'll spoil a bit of the surprise, right? Because I'll cover this to a degree at the Expo conference next month, where I'll see you. But yeah, one of the key metrics or several of the key metrics that we track at Moxie, we're looking at airport arrivals of foreigners into international terminals, for example, across various Mexico airports. We're also looking at hotel average daily rates, and then occupancy levels in some of the key markets in which we lend. And then, interestingly, we also do the same kind of analysis in other similar like destinations in the US, like areas of Florida, Hawaii, for example, California, areas where you might also have short-term rentals and or long-term rentals, right? And so that's a really fascinating look at, the opportunity that Mexico has, particularly in the Riviera Maya, where you have price points that are relatively low. When you go west, if you will, into Cabo, you have a very mature real estate market from a foreign buyer perspective, much higher price points on the whole, generally speaking. But when you look at Cancun International Airport arrivals, it's like 4x that of Los Cabos, for example. So it's a really interesting to look at some of those statistics. Those are things we look at every day. Mexico is the #1 US tourist destination. And
I think it's number 5 in the world.
Is it #5 in the world? Yeah. For US, it's #1. I think there are 40 million roughly visitors annually from the US. There are actually like 1.6 million US citizens that live in Mexico, that call Mexico home for at least part of the year. And a million of that 1.6 are between the age of 25 and 59. So we're looking at a lot of those metrics on a regular basis, right? As we invest in our business growth and decide where to open up new offices and where to best serve our growing client base and real estate partners.
That's amazing to hear and understand, like, how do you look at things? And I wouldn't be more happy to have you here. I think I have a couple more of questions, but I don't know if you wanted to talk more about something you like.
Sure. Like, you want me to talk to you more about like Moxie's product?
Yeah, I mean, you talk about the refinance also, right?
Sure. Yep.
So I think that is very interesting because actually that is one of the questions I still have.
Okay, sure. Yeah. Let me talk to you about Moxie Refinance. So in addition to purchase transactions where a client is in contract on a property, comes to us and we will fund the escrow for the actual closing, we do two kinds of refinance transactions. One is what we call rate and term refinance. There were some balloons that
yeah, I saw that.
that was very funny. Hopefully you can edit that out. I'll start again. So
I can start with the question.
Well, okay, I just keep going, but there's two kinds of refinance transactions that Moxie handles. One is called rate and term refinance, and that's when we're paying off an existing lien. So if a borrower has a mortgage from a Mexican bank, for example, or some other finance company that's secured by a lien on the title, then we pay that off. For example, if you purchased a property, new construction from a developer, and it's maybe has a balloon payment in 2, 3, 4, 5 years, kind of hard to enjoy your new exciting Mexico destination home when you have that hanging over your head, like, I've got to come up with $500,000 in 2 years, or I lose my house, right? That's stressful. And many Americans prefer to have, a 30-year term, fixed payments, right? Very easy. So we do a lot of those kinds of transactions where we're paying off another lender. But the other kind of transaction that I think is really helpful and it has become more and more popular as liquidity comes into focus for investors and for US people in particular is the cash out refinance. So we help clients who maybe didn't know we existed when they bought the property, or maybe they bought it before we existed, or whatever, right? And they figured out a way to purchase it, and they always kind of thought of that home or that asset as an illiquid one, and now realizing it doesn't have to be illiquid, we can help with a cash out refinance. So in that situation, we'll lend up to 60% of the appraised value. So round numbers, if the appraisal, we do a commercial appraisal, if it comes in $1 million, you could borrow up to 600,000. And that's kind of how that works. You could use the $600,000 in that example for anything you want. You could buy another unit. You could remodel your current one. You could, anything you like, right? No restrictions on the use of that cash. So that's becoming more and more popular. Clients are using it actually to even pay off money they borrowed in the US to do the original acquisition. A lot of clients used home equity lines of credit or asset secured lines of credit that have adjustable interest rates. And we've seen, obviously, those interest rates almost, well, depending on where it started, but the US prime rate is in excess of 8%. I think it's 8.25 today. Back in early 2022, it was in the threes, right? So the interest only payment on home equity line of credit significantly increased in a very, very short period of time. So we see a lot of clients saying, hey, gosh, let me take a cash out refinance on my property in Mexico and pay off some of this debt. Anyway, for a whole multitude of reasons, that product is very attractive.
Yeah, I can imagine, and I would use that, and I have a couple of clients that are looking for something like that. They're just haven't figured out yet if this is the best moment to refinance for them. But talking about interest rates again, and this refinance product you have, with the high interest rate environment we have right now, is that a possibility to get a lower interest rate in the future with Moxie?
Yeah, good question. So we don't have any prepayment penalties. So clients would be welcome to apply to refinance into a lower rate if rates drop down the line. One of the most attractive features, at least what clients tell us, is that we offer a fixed interest rate, right? And to my knowledge, that's not really available in the country of Mexico. Even if you were to get close to our pricing, which I don't think anyone can. But in the event that rates go down, clients are totally welcome to refinance the Moxie loan with Moxie, a portfolio refinance. There's still transaction fees. It's a whole new loan, so you have to reapply, you have to requalify again, and then we essentially pay off ourselves, and that's done without issue in the event that rates go down. But if they remain high for a very long time and or continue to increase, which is a possibility, there's a lot of advantages to having a fixed interest rate for a long period of time. And, you know, for property investors who are more focused on the overall cash on cash return and or the overall stability, and maybe more focused on from a KPI or metrics perspective, they're more focused on ADR and occupancy. A fixed interest rate loan offers a lot of peace of mind and stability across the board. The other element of Moxie loans is that we require what's called impounds, which means we're collecting on a monthly basis a portion for property tax, for fideicomiso renewals, and hazard insurance, and a couple of other things. So a lot of clients told us when we first started our pilot, like, I don't know how to pay my property taxes. I don't really know when they're due, and property taxes have to be paid in Mexican pesos, and the fiduciary bank managing my fideicomiso doesn't send a bill. They don't provide an online payment direction. I'm just supposed to know when that renewal is, and then I have to send a wire transfer, and it's very difficult. So we operationalized all of that. So when clients make their monthly principal and interest payment for their mortgage, they're also paying a portion of their hazard insurance, their property taxes, their fideicomiso annual renewal, and so forth. And we kind of take care of that for them and make sure that those items are paid on time.
That comes very handy.
Yeah. And some clients that, people used to hire a property manager just to do that, pay a property manager every single month.
15% to 25%.
Yeah, just to pay the property taxes. And so we've operationalized that as part of our loan servicing process.
That's amazing. I think that's something that really adds value. And I'm obviously all of that you mentioned is really, really helpful for people that want to buy or invest here in Mexico. So yeah, I think I have one more question, like regarding people that you have as clients. Like, what are they looking more? Like, what is the currently landscape of clients you have?
Yeah, so Moxie clients we lend all over Mexico, both in restricted and non-restricted zones. There are a couple of key things to kind of keep in mind. So Moxie right now, our credit policy allows us to lend to US citizens or US permanent residents only, which means you have to have filed tax returns in the United States and have a credit score in the United States from all three bureaus of at least 700, which is not that difficult to do. We also require a minimum loan size of 250,000, which means we transact on properties with a value in excess of about 380,000 US dollars, or the equivalent of that in Mexican pesos. So that is a credit policy parameter right now, right? Eventually, longer term, we will lower that minimum loan size and be able to help more people. But today, we're transacting on properties with a value equivalent to about 380,000 US dollars. Important to kind of keep that in mind. The other is one of the things that clients rely on us to do is make sure that they are owning what they're buying and paying for, and that the transaction is secure as it can be. And so we insist on a legal closing in the eyes of Mexican law. That means we don't do soft closings. We don't participate in soft closing. It's a very risky thing for anyone to do, and I wouldn't recommend it, but it does happen more than I would like. So we insist on a legal closing, which means you sit before a notario or your power of attorney sits before a notario, the seller sits before a notario or their representative, right? And you actually sign the documents. That's how Moxie secures its lien. And so that's a really important piece of this as well. And the question that comes up a lot is, well, does Moxie lend a new construction? And the answer is yes. But depending on the reputation of the developer, I would say, not that we underwrite the reputation of developers, but some developers do follow the law, meaning before they deliver a unit, they've manifested the construction with the local municipality or the tax assessor's office or the cadastral. And they have also recorded a condo regime with the public registry, if that's applicable, right? And a lot of developers I've found sometimes will push those activities, and they'll try to deliver units to people doing a soft closing without completing those steps. And so Moxie does lend on new construction, but we insist on legal closing in the country of Mexico, which means the construction has to be been manifested. And if a condo regime applies, it has to have been recorded. And I think that's a really critical kind of component. We also, again, our policies are no more stringent than just following the law. I think that's a really important thing to mention, but a lot of times real estate transactions get done, like air quotes, without necessarily following the law, which is disadvantageous to the buyer, right? So clients rely on us to look out for them as it relates to that.
Awesome. Yeah, I think in terms of being cautious, what tips do you have for US investors now that you mentioned legality and having a close before a notario and just like validating the developer has all the requirements?
Yeah, I would just say, obviously, contact the Moxie team and we'll help you through all of that. We do that for you and make that really easy. If someone watching this or listening to this isn't going to work with Moxie or can't work with Moxie or doesn't need to or doesn't want to, my advice would be hire a competent attorney to represent you, and make sure that you're working with a competent closing company or closing attorney. That could be the same attorney, and be really diligent when you select that attorney, so that that person is watching out for your best interest, right? A lot of times developers and real estate agents, and it's not that they're intentionally trying to perpetrate fraud or anything like that, but they will push really hard on buyers to do a soft closing, or, oh, their deed is delayed and so on and so forth. Well, let's just get you your keys and then, we'll do the closing later. And that is, in my opinion, is not a good idea, right? Because you don't actually own anything in the eyes of Mexican law, and you've paid for it, but you don't own it. So I think just hiring a competent attorney, if you're not going to work with Moxie, and if you do work with Moxie, you're welcome to also hire an attorney. We have clients that do that all the time, and we work with those those external legal counsel. But that would be my general advice. And again, it's not that anyone in this industry is intentionally trying to make screw anyone over, for lack of a better way of saying it, but it happens sort of accidentally all the time. And we see situations, I can tell you, we see it every single day. Client will come to us, they want to apply for a refinance or a cash out refinance. And we say, great. And we take the application and we underwrite the credit and we approve them. And we start looking at the collateral and we realize they don't actually even own the house, right? They bought it, air quotes, 3, 4, 5 years ago, but they don't actually own it, right? So you can't refinance something you don't own. And in many cases, we can go back to the developer and we actually process it as a purchase transaction, but what if the developer is not there anymore? What if they're not willing to sign off, right? Then you paid for this, you've been living in it for a long time and you don't own it, right? Same with properties in an ejido area, right? Where you have ejidadores that owned the land at one point before the condo building or the residential single family home was built, right? If you don't do a proper title search, which a lot of agents and or developers will forego or encourage you to forego because like, oh, we just don't do that here. It's not really needed. But like it is, it is needed. We do it here. And so just getting competent or advice from a competent professional that does understand and has the right vendor strategy in place is a really important thing. And I don't want to scare anyone with any of this. I'm just trying to share some of the things that we see on a regular basis, as sort of things to watch out for your listeners or viewers.
Absolutely. Thanks a lot, Alex. And I just have one last thing. What foreseeable things you see in the short future for potential buyers that are stepping in the sidelines, waiting for example, mortgages to lower?
Yeah, I mean, it's really a personal choice for those folks. I think if the transaction pencils at current interest rates, then all you can, and especially if you're getting a fixed interest rate, and it still pencils out and it still works for you and or your portfolio and or the choice that you're making, then all you can do is make your situation better in the future. But waiting on the sidelines or banking on something that you can't control, we talk about this at Moxie all the time, like let's focus on the things that we can actually control and move the needle on those, and the rest of the things that we can't control, we have to let go, right? And so if the transaction pencils out and it makes sense at today's interest rates, all you're really going to do in the future is improve your position when circumstances change. So if interest rates lower, you can refinance, or when that flood of people waiting on the sidelines all come in and now start buying it up, you have appreciation, you can sell, right? Buy something else, right? So that's my personal take on it, but everybody's situation is different, and everyone's level of risk tolerance is different. So I would say, and my viewpoint is certainly biased, but I don't see any major crash in the Mexican real estate market happening in the short or medium term. I think if anything, it's the opposite, just based on the data. And that's not a personal belief. It's the data telling me that. Airport arrivals, the number of people. We also look at like the percentage of people making over $100,000 a year that are US citizens, working from a country other than their home country of citizenship for some portion of the day, week, month, quarter, year, right? That is all on an upward trend. And so I think, all of the benefits of Mexico, including the financial benefits, like property taxes that are a tiny fraction of what they are in the United States, like the increased number of visitors that are arriving into international visitors arriving into Mexican airports every single day. That data tells me that we are in for some pretty cool stuff in Mexico real estate, and in the Riviera Maya. That data is very interesting and enticing, especially when we look at some of it in your neck of the woods.
Yeah, I agree with that, and I feel a lot more of confidence regarding all of our US investors that we have here at Antel. After talking to you, Alex, it's really been very useful to have all our listeners and our future listeners have you in this show, in this episode about what is investing in Mexico. We have discussed about Moxie, about the nuances that you help your clients go through, all the value proposition, about the current interest rate landscape, the pros and cons of penciling a deal right now, and also about the technology you use to prevent your clients getting into a problem. No? So you are helping them more than a current global mortgage company help, and still you do it like as a US mortgage loan, which makes it like a mortgage, US mortgage loans, which makes it very useful for people to be feel comfortable doing a deal here in Mexico.
Yeah.
So, and the potential of the Mexican real estate market. So I'm very happy to have discussed all this with you. I don't know if you want to add more.
No, I mean, this has been a lot of fun chatting with you. Thanks for having me. I would encourage anyone that wants to look into Moxie's offering to just check us out online. And if, there's a lot of frequently asked questions on our website. We also have a pretty in-depth fee, costs, and charge disclosure that really walks through all the nuances of foreigners buying property in Mexico, because it's very different than in the United States from an upfront fee perspective. And then our mortgage advisor team is just fantastic. Great group of individuals with a lot of mortgage lending experience and who go through rigorous and robust training at Moxie to understand all the nuances of the market here. So for anyone that wants to learn more about our products and programs, or has questions, I would suggest they just find us online. It's www.moxie.global. Yeah, we look forward to chatting with your viewers or listeners.
Absolutely, I would encourage them to do so. And I think you also have a mortgage calculator online, right? Like to estimate.
Yeah, that's one really cool thing we built recently. As far as I know, it's the only one that exists for Mexico. But yeah, you can estimate not only what your monthly payment would be for a specific property, but you can also estimate the amount of cash to close, which I think is critical, right? And I mentioned that briefly just a moment ago. The amount of cash required to close a real estate transaction up front in Mexico is significantly different, higher than it is in the United States. The ongoing expenses of those properties, much lower than the US, right? So you're kind of in the money relatively shortly after you close, so to speak. So that's a really key component, is cash to close on the actual transaction itself. It's not just 1% or so that you would expect on a US transaction. And so that's an element of our calculator as well, is just kind of estimating that. One of the other, for our clients that are going through the process, one of the things that's really cool that we've built into our April, who's our head of technology, she's built into our system, is that an estimated cash to close worksheet gets automatically generated to our clients as they're going through the process. So there's definitely no surprises as you get toward the end. But the calculator on our website is a great sort of introduction to that, and kind of estimates high level what the cash to close will be, and then what the monthly payment will be beyond just principal and interest, but also fideicomiso, hazard insurance, right? Those kinds of things. And for example, to come up with the hazard insurance figure, we analyzed all of the transactions that we've done historically in various different markets and tried to figure out, okay, what is the average? If you're buying a $500,000 unit in Riviera Maya, what does that hazard insurance look like versus $1 million unit in Los Cabos, where you're more prone to hurricanes and winds, right? High winds, so that coverage might be a little more expensive, right? And so there's some elements of that built in. It's just for example purposes only. So, but it's very helpful, I think.
Yeah, super useful. That's awesome. Yeah, I've used it in the past, and I think it's really helpful for clients to get a feeling of what the cash to close would be and the estimated loan payment, right?
Yeah.
So yeah, again, Alex, I think that covers up everything that I planned, and I think it was more than than it. So thank you very much for all your insights, for coming to this episode, to the show. I think this is gonna be live in the coming 2 weeks, so
Okay.
probably before the event in Cancun. So yeah, a bit of spoiler there, but
That's fine. No worries. It'll be fun. So that's
oh
great.
yeah,
Thank you so much for having me. This was a lot of fun. I appreciate you. And yeah, I look forward to meeting you in person next month.
yeah, absolutely.
Okay.
Thank you,
Take
Alex.
good care. Thank you so much.